You know who's not being cautious? Everyone in bond markets, where they're basically going into as much risk as possible and people are bidding up bonds, even as the U.S. sells record amounts of them. You were pointing out you understand why, because there is something for everyone. If you want spread, if you want duration, you can go and you can find it because you're actually getting yield. How long will that look attractive if we still do see some of these economic prints coming on hotter than expected?
At the moment, you're in a situation where there's a lot of cash. You showed some of the statistics earlier today, and it's true. There's a lot of cash sitting on the sidelines, and that means that there's powder dry for investors moving into other asset classes, and that includes the bond market. I think that we'll see more of that this year. It's been really interesting to see the issuance patterns that you mentioned in treasuries. A pretty big issuance, and that's been very well absorbed over the course of this year. Again, if you look at the European markets, and actually IG, you've had some record sort of inflows into the asset class. So I think there is appetite for the fixed income piece of the market. And it's not just a growth story. It is also that inflation story. We have seen inflation coming down, and that's what investors are looking at. Another aspect that I think investors are taking comfort from is that we are talking about rate cuts. It's a question of when.
So where is this cash coming from? Because when we hear from people, they say there's $6 trillion in money markets. And then we talk to someone who runs money market funds and said it's not moving. It's just growing because this is actually an asset class in its own right. Where is it coming from?
Well, it's interesting. It's feeding on itself. Some of that, you've got a decent coupon on the cash side of things, and I think that is helping. We had an interesting conversation with an investor the other day, saying that actually something that might be slowing the economy is to cut rates, because it'll mean that you get less income on the cash side. So I think it's a question of investors being cautious, wondering what's going to be next from an equity perspective, maybe not quite being ready to fully go into the bond markets either, and I think that explains what we're seeing in the cash markets.